What's happening, YouTube? It's your boy JD Trades. I'm bringing you this morning's outlook. So, as we always do, we're always going to start things off with the DXY. Let's talk about yesterday's price action and exactly how prices progressed. So, we've actually seen the dollar continue to hold its bearish price action off of the back of that inflation data. As you can see here from my arrow, I was expecting a dip of the low and a push to the upside. However, that's not what played out, and that's perfectly okay. We did initially get a push up from the liquidity grab, which was where if you check out the last video, we all caught the gold long to, of course, take out just this little swing high here, which was a very, very good move. Now, for the time being, dollar is still very weak. Now, it's important for us to understand, like, okay, cool, yes, structure on the lower time frame is coming down. However, the overall weekly structure is still bullish. If we maintain this weekly low, right? If we maintain this weekly low, I would not be surprised if next week we potentially still rival the highs. At the moment, we are sitting inside of an area where it's a bit of no man's land. There definitely needs to be a lot more data to be able to justify, reasonably whether to go long or to go short. We need more data, guys, and it's literally just as simple as that. So for the time being, I'm going to see how the rest of London session progresses. It looks like we may get a pullback higher to of course, take out some of that bearish price action that we've had yesterday's New York session. Okay. As we come over to the likes of Euro USD, we are currently rejecting off of this 4-hour candle here. As you can see here, I did give you guys a setup yesterday to, of course, monitor. If you guys are inside of my Telegram and stuff like that, and inside of the community, you would have noticed that I did post up a short entry for EU. Now, for now, that's pretty much the only trade that is really, looking likely to a certain point. Now, is this the area where price is going to, of course, take out that swing low? We'll have to see. Just need some more data to print, some more willingness for price to come down. As we've been very bullish across most of the majors, anything XXX USD has been very, very bullish. So it's very tough to now say, hey, I'm definitely going to sell this. So as time goes on, there's a very good thing that I would say for you guys. Look, even from here to here, right, the range is around, let's say, 140 pips. Okay, inside that 140 pips with a decent or pretty small SL, you can still catch your 1 to 3s, your 1 to 4s, your 1 to 5s risk to reward ratios. You can still do that. Okay, this is a decent enough range where you can work some pips out there. And this is how I tend to look at the market is, cool, I've got an area, what is the range? And, is this feasible for me? Do I have to catch the whole range in order to make a decent trade? No, you don't have to. Right now, for the whole range is around, let's just say, 280 pips. Okay, for the whole range. So inside this whole range, if price is going to come down and you don't manage to get a short here, there's going to be plenty of opportunities for you to get into this market if it is going to come down. So I'm not even too worried about Euro USD, but if I were to sell, this would probably be the most interesting area to take those shorts from. Likewise with pound dollar, okay, we have of course pushed up. We are heading up to very close to areas where price is shorted from previously, so it's definitely in its right to come down lower. Next is going to be for USD CAD. USD CAD, we didn't actually get the sweep of these highs as I was expecting. I didn't want price to, of course, dip higher into the area before we actually start to drop, so that trade has been missed. We are sitting inside this daily candle now, and it is at the moment giving us a push. So as you guys can kind of see, most of the majors are in sync. Okay, they are doing something very similar to each other. And of course, I'll tell you guys this again, it doesn't mean there is a trade setup. As you can see here, 4 in the morning, we had a small pullback during Asia session, pull back into this 5-minute candle for the long, and that's what's been kind of sustaining USD CAD for the time being. So there may potentially be a trade on USD CAD later. I'll have to, of course, take a closer look. Now, let's talk about gold. Of course, you guys' favorite. Now, with the current price action that we are getting on gold, I wouldn't be surprised if we get a very low volume day today. But of course, we do have, I believe it's building permits coming out today, which is a high impact news. So we'll see how that affects gold. I don't believe it's going to do anything too crazy, but it's still important for us to know exactly what's going on. Is gold in an area to sell? No, not that I can see at the moment. It's not an area that's screaming out to me saying, hey, definitely sell, as price has been very, very bullish. So it's like, I don't see the point in going against the trend. So for the time being, what would make more sense is to find re-entries for the buys, okay, or for the longs. For the time being, the highs are the closest area of liquidity. It just looks like gold may, well, potentially may make another all-time high, potentially, okay? That's definitely on the cards here for gold. We can look at the likes of 24.17. If we get a very nice, cool pull down into this daily candle, okay, it could be next week, maybe midweek next week. Pull down to this daily candle, look for a long entry. We could potentially rival these highs. So, of course, we just need to anticipate how this weekly candle is going to close. With last week's closure and this week, we tested the high of this weekly candle here, okay, with the tail of this week's candle, and we've kind of just pushed off from there. So the highs just look very likely, guys. I just believe it's very unlikely for price to just turn around. And if that's the case, that most likely means that the dollar will continue to come down. So I am more on the bearish side for the dollar for the time being. However, I'm very interested in how the weekly candle is going to close this week. Okay, then we'll gain that understanding to say, hey, next week next week we're more likely to do this. Next week we're more likely to do that. It's important for you guys and everyone to understand that in this space is about probabilities and using as much data as you can. And it's also about understanding the market sentiment. Just because data was released doesn't mean that price is going to react negatively. Just because the data was negative for the dollar doesn't mean the dollar is going to react negatively. Okay, as you know, or you may not know, I will probably I'll make a video for you guys talking about market sentiment and news releases in due time. Just because price did come down, we also saw price rise all the way back up before we saw that the overall sentiment was bearish for the dollar, even though the inflation data was actually slightly better. But of course, once you understand the overall picture and how long it's been since the dollar has actually improved its inflation data, it's still not great. Okay, it's still not great. So with that being said, that's all for today. Look out for that video and don't forget to drop a like, comment, and subscribe. Share this video so that it also goes out to other people that may need or may want another perspective. Always remember the theory behind the practice. You know the vibes. Money day.